Did you know? Trust Fintech's advanced GST compliance software, designed to reconcile the ITC up to 97%, accurately eliminating the challenges of manual Excel reconciliation of IMS versus to be versus purchase register. Trust Fintech's innovative GST compliance software will deliver the reconciliation results into 20+ buckets versus 4 to 5 buckets of average of what peers provide. Trust Fintech tool is also designed to help you stay ahead. It analyzes your own GST filed data to assess the potential of future GST notices. This allows you to take necessary actions in advance and prevent such notices from occurring. Trust Fintech is one of the most affordable GST compliance solution. ISO 9001 to 7001 and ACMMI Level 5 certified company, with the global footprints of 25+ countries. We are committed to make your GST compliance simpler, smarter, affordable and efficient. Curious to know more? Contact us 9422114752. Thank you for watching.
Good morning, everyone. Welcome to our webinar on SoftGST Elite for Enterprises. For today's session, we are glad to have Mr. Kalyan sir with us. He has an expert in GST compliance tools at Trust Fintech Limited. With his knowledge and experience, this session will be both informative and engaging. Thank you. Kalyan sir, over to you.
Yeah, good afternoon all. So today we are going to showcase you our the value added features of GST solution, and we are a fintech company as well as a GST Suvidha provider. We are registered in the National Stock Exchange and we have the footfall in 25 countries. So very larger banks like Bank of Maharashtra, Saraswat Bank, Cosmos Bank uses our GST software, as well as we are present in the manufacturing sectors like Tamil Nadu paper, etc., whose turnover is more than 1,000 crores. So shall I start?
Yes, sir, sure.
Okay. See, today, after meeting approximately more than 200 tax heads and the CFOs, what we understand is there are two key challenges in the industry. That's number one is the organizations are unable to avail the first issue in terms of claiming the GST ITC. That is today with the even a manual reconciliation or the half reconciliation tools or any other moderate tools are available, it gives up to 75 to 80% of the reconciliation. That is the standard. However, the issue is with the rest of the 20%. So to claim the 20%, people put lot of efforts, but they could not able to claim the legitimate ITC. Why they are not able to claim the legitimate ITC? What are the challenges? I'm going to, while we are going to showcase the demonstration in 2 to 3 minutes. We'll explain. So our tool reconciles more than 95%, puts into various buckets, right? The reconciliation results. Number two, the second most perennial issue that a taxation head or the CFO finds is the GST notices. So until they receive the GST notices, they don't know why they have not received, why they have received the GST notices. However, our tool also provides the proactive insights so that the organization can prevent those notices in advance. So today, along with me, my colleague Gaurav Deshmukh is going to showcase, and I'm going to present the GST Advance software, which is designed to address these two perennial issues, followed by the Q&A session. Gaurav, over to you. Ours is a SaaS model, and it can be opened from by using an internet from any place. So we are going to now showcase the GSTR 2B versus purchase register. So this is actually the data we have taken from the using the consent. Whereas let's say we have now brought two datas, that is our purchase register. You can see there are 170 invoices, whereas the second one is the 2B, it is 170, and the purchase register is 162. That means there are 8 invoices missing in the purchase register. So we will see why these 8 invoices are missing and what could be the reason, we will discuss. And now we will start the reconciliation. Let's say now once we have started the reconciliation, we have brought the total reconciliation results into the 6 main buckets. What are those buckets? It is exact matching. There are 74 records. Single column mismatch 25 records. Multi-column mismatch is 39. 100% mismatch is 4 records. Not available in the 2B, it is 19, and not available in the purchase register is 28. So as I said, in fact, exact match. So what are the parameters that we consider while doing the reconciliation? One is the party GSTN, invoice number, invoice date, taxable value, place of supply, GST amount, and the GST heads. These are the parameters that we consider while doing the reconciliation and bringing to the results. So for example, now we will do one by one. For example, there is an exact match. Exact means all the parameters, whatever I said just now spelled out, are matching. So however, there could be the sometimes what happens is the customer might have received the invoices in the 2B, but not received the actual goods or services. So as per the GST rule, you should receive the goods. You should receive the goods to avail the input tax credit. So for example, in such a case, what happens is our once the customer knows that we have not received the goods, but it is reflecting in the GSTR 2B, we have the option to keep these 3 or 4 invoices pending so that it will disappear from here. And whenever we do the reconciliation, it will again next month automatically it will come in front of. For example, now we have selected these 3 invoices. These 3 invoices means the invoice, it is available in the GSTR 2B, but the goods are not received. So what we do is we are going to keep these 3 invoices pending. Just go pending. Take action. See, now it is disappeared. So wherever it is disappeared and kept, it is pending, it is 3 invoices it is showing. Now, after let's say reconciliation, usually the GSTR 2B appears on 14th. 15th, the finance team has done the pending these 3 invoices. However, on 19th, they have received the goods. So what they should do? Should they forego the input tax credit? The answer is no. We have the beautiful option of rollback. This is one of our USP. Once we do the rollback, these 3 invoices again will come forward. Now, for example, now we are rolling back. So these are the 3 invoices which are we kept it pending. Now we are doing the rolling back. Once we have done the rollback, again this has come in a 74. Now we have the option to select bulk and accept. Let's click select all and take action. Yeah. So entire all 74 invoices are reconciled. So this is very simple. Exact match. It is the simplest form in the GSTN. Now we'll go to the next single column mismatch. See, once we click the single column mismatch, under the single column mismatch, we have given 11 buckets. As I said, why we are able to do the reconciliation more than 95%, because in the tools which are available in the market has only 4 to 5 buckets. That is matching, mismatch, probable match, or nearest match, not available in the PR and not available in the purchase register. But when you say mismatch, what is it mismatch? Is it an invoice number mismatch? Is it an invoice date mismatch? Is it a place of supply mismatch? Most of the tools do not provide. So we understood this issue and we have developed these buckets further so that there is a minimal efforts of human while doing the reconciliation. So in the single column mismatch, what are those invoices which are mismatch we found? Invoice number, invoice date mismatch, invoice value mismatch, taxable value mismatch, place of supply, GST amount, GST heads, that is CGST, SGST or IGST, and party GSTN, one to many, many to one, and many to many. These 9, 10 and 11 are critical. We will explain henceforth. For example, just to take you to the what are those invoices missing. For example, invoice number mismatch. There is one invoice which is not matching with the GSTR 2B and the PR. See the beauty of our tool again. Let's say you are reconciling 1000 invoices, and out of 1000 invoices, there are 4 invoice number 1, invoice number 25, invoice number 270. If these 3 invoices or invoice number mismatch, so you need to do the deep dive. You usually use the VLOOKUP and find out one by one matching, which is next to impossible. However, our tool has got the capability to identify these invoices numbers. For example, you can see it is highlighting in the different color. As per the GSTR 2B, the invoice number is 9090 and the purchase invoice number is 9099. That means either if it is an e-invoicing, the issue is with the purchase team. So they have entered 9099. It is a human error.
GST reconciliation related as.
Hence, our tool is identifying these invoices. Now, what the customer can do? The customer can first he has to identify which one is the right one. Let's say he has to see the physical invoices. If it is an e-invoicing, anyway, he has to correct the invoices whatever is applicable. For example, he has received the invoice number 9099, but the e-invoicing it is 9090. Then he should change as per the GST law and then accept it. Let's say if he has if he is not the if his vendor is not e-invoicing applicable, physical invoices he has given, or he has given an electronic form which is not under the e-invoicing. Let's say his turnover is less than 5 crores. Then what happens is what he should do. He should talk to the vendor, ask him to amend the invoice number, file the return. If it is issues from his end, he can change in the ERP or wherever he is accounting billing software and accept or reject as based on the case. Here it is a case of a clerical issue, so he can take the necessary action. So this is what our tool is able to identify the to be invoice number related issues. Go back, Gaurav. See, the second one is taxable value. There are 2 invoices under the taxable value issues. Click. Again, our tool is identifying these issues under the different color. See, as per the 2B, it is 120,294, and it is as per the purchase register taxable value 120,295. It is second invoice is 40105 taxable value, and it is 40106. So that means 1 rupee difference. Now the customer can take the action by, since it's a 1 rupee difference, he can take the input tax credit. We also have a facility where threshold limit can be increased by 50 rupees. Let's say if there is a difference among the 2 invoices, that is 2B and the purchase register, there is a difference of 50 rupees. He can select that 50 rupees so that this issue will not appear up to 50 rupees. So this is another kind of an issue where the customer can find using our SoftGST because our tool is giving this information under the different color. Yeah. So like this, there are 11. Now we will see place of supply. Yes. Yeah. So this place of supply, that means you can see as per the 2B, the place of supply is 27. As per the purchase register, the place of supply is 9. It's again a purely clerical error. So he has to correct in the ERP or an accounting system, whatever he is using, and then he can go for GST, ITC claim, because other than this, every other parameter is matching. Yeah. Now it is one to many. So it is very important one to many. Just click go. What happens is, let's say, for example, we are using the services like courier or facility management or internet services. What happens is this courier customer or the courier service provider, they provide the invoices, let's say every 2 days 1 invoice, or every day 1 or 2 invoices. So what happens is, while we are doing the entry, most of the time we club or the invoices, or sometimes the service provider clubs the invoices and uploads into the 2B. That is called one to many and many to one. here it is supplier ka hai. So here, in case if you see, the supplier has clubbed the invoices, but whereas we have uploaded, the customer has uploaded as and he has received the invoices. For example, he has got the courier today, I mean yesterday and day before yesterday. So two times he has got 500 rupees, 500 rupees each. So he has uploaded correctly, has followed the good accounting practices, whereas the supplier has clubbed those invoices and uploaded the GSTR. He has filed as GSTR1. So this case, it cannot be reconciled using a manual system. So our tool has got the capability to reconcile and gives the information, these two invoices against one invoice. The total is matching. And our tool will provide stating that this is a human issue and the total value of both purchase register and the 2B is matching, but only due to the human error, we have clubbed the supplier has clubbed the invoices. This is called one to many. And the second one is other way around. It is many to one. That means the supplier has filed correctly, but whereas the internal accounting team has clubbed those invoices and filed the return. This is called many to one. Even in such a case, our tool will give the information, brings these two invoices in front of the person who is filing the return and allow them to take the action. Based on the merit of the case, they can select the invoice and take the ITC. The third one is many to many. Let's say, for example, the supplier files the two invoices, whereas in the books, there are three invoices. The value of the GSTR2B is 20,000. The value of the supply in the books is 20,000. However, there are in the 2B you can see 14,000 and 6,000, and whereas in our books you can see 7,000, 8,000 and 15,000. Again, there is a dispute of there is no dispute in terms of value, but however there is a dispute in terms of number of invoices. So that means all the parameters are matching, value is also matching, but these are the two issues where our tool is able to identify the total of invoices matching with each other. This is called many to many. Yeah. So with this, the single column mismatch is over. Now we are going to multi-column mismatch. Again, the name itself is self-explanatory. Under the multi-column mismatch, how many buckets? There are 31 buckets that we have provided. 31 plus earlier 11, 42 plus this 6, 47 buckets that we have provided against the average market standard of 5 to 6. That means, for example, here what I'm saying is invoice number and the GST heads. That means it is more than earlier. It was single column mismatch. Either the invoice number is mismatch or invoice date is mismatch or something is mismatch. Only one. Here it is. There are two parameters which are not matching. But which are those? Invoice numbers as well as GST heads. So here go back over. The GST as per the here as per the GSTR2B, the invoice number is 8546, but the purchase register is 85466. Apart from that, there is one more error. That is called GST heads. So it is as per the 2B, it is CGST and SGST, whereas as per the purchase register, they have entered as IGST. So GST head itself is the issue. Our tool is identifying, giving the information to the customer, stating that these are the two issues. Now the customer should verify his accounts and the invoices, whatever they have received, and based on the merit of the case, he should change his ERP or he should give the information to the supplier, get it corrected, and then they can claim ITC. If this tool is not available, it is next to impossible to reconcile, identify these kind of issues. Yeah. Now we will see another example. So invoice date and place of supply, eighth one. Ek hai. See here the invoice date is this 29th August as per the 2B, and as per the PR it is 3rd August, right? And the second one is as per the place 2B, it is place of supply is 27, it is 24 as per the PR. Could be human error while doing the entry, since anyway all the 99% of the markets are entering the details, all the purchase invoice details manually, be it using SAP or any other Oracle or any other ERP. Entry is still manual. Hence, while doing the entry, Instead of 27, it could have been 24. So our tool is giving the information that these are the issues. So in case if they have entered wrongly the purchase invoice date, with the 2B, they can change the purchase date and they can change the place of supply and go for an ITC. So one thing is common, in case if there are issues with the purchase register, they need to change the entries in the ERP before they claim the ITC. So one more we will see place of supply and GST heads 13 tera wala. See, there are three issues which is as per the there are as per the 2B, it is place of supply is 27, and as per the PR it is place of supply is 23, and as per the 2B the CGST amount and the SGST amount is 0.45, whereas it is the customer has entered in the purchase register as 0.09. So these are the two issues. One is the place of supply as well as the GST heads. So like this, there are 30. So in now each what the customer should do, the customer should change the books in case if there is an issue really with their ERP system and the physical invoices, whatever they have received, right? So this is called multi-column mismatch. So how many multi-column mismatches that we have given? We have given around 31. So this is called a multi-column mismatch. All are bifurcated and given, and the examples whatever I have given is all practical. Just to showcase the demonstration, we have identified these issues. Otherwise, there are other issues also. Now we'll go to the third column, 100% mismatch. What does it mean? Except the GST numbers, no other parameters are matching with each other. That is the GST, be it place of supply, whether be it GST amount or taxable amount or tax amount. Nothing is matching. Only the GST numbers are matching. How many are there? There are 4 invoices our tool has identified. Right. So this is we are bringing in front of the customer. Now the customer can either reject this invoice, and once they reject this invoice, rejection. Invoice rejection. So once we reject this invoice, the customer, so once we reject the invoice, customer can type the email or response stating that this invoice number so and so has been rejected because of so and so reason. Please correct it. Right. This information will go to the registered email of and the registered email and the mobile number of the customers directly with the supplier name, and I mean with the customer name and the customer GSTN number. So that is we have got the option. Now the fifth one is not available in the 2B. Again, this case is a self-explanatory. That means these invoices are available in the books, but the supplier has not filed the returns. That is called not available in the 2B. How many invoices are there? So there are 19 invoices are under the not available in the 2B. If it is not available in the 2B, definitely the customer cannot take the input tax credit. Now it is giving the information to the customer stating that these 19 invoices you cannot take the input tax credit, which may affect his financial statement and the cash flow. So what he should do, if the vendor is critical, he can release the GST base amount, I mean the invoice base amount, and hold the GST amount. So our tools also helps to take the decision on the respective vendor. If this records like not available in the 2B, if it doesn't reflect in the reconciliation statement, then he cannot take the decision, right? And another important aspect that our tool is giving is it is giving the information about the supplier GSTN. So for example, here you can see the GSTN number and the status of the GSTN it is showing is active, and what are the taxpayer type, whether is he a regular GST taxpayer or whether is a, let's say for example, what happens is today at the time of registration, he has registered as a regular one, but he might have gone to the quarterly filing after 1 year, but the customer is still paying thinking that he is a quarterly regular customer, regular vendor. So in case of a quarterly customer, what happens is once the supplier files the 2B, that is his 3B, then only the customer can take the tax credit, that is once in a quarter. So in such a case, what happens is he can hold the GST amount, release the base amount. So that is what it is showing, and it is also showing the GSTN status. Apart from the GSTN status, it is also showing the GST filing score. That means which month he has filed the respective return. GSTR1 when he is filed, May month when he is filed, June when he is filed. It is giving the complete information about the GST filing status, both GSTR1 as well as GSTR3B. So as per that rule number 37A, if the supplier has not filed the GST return, then the customer has to reverse that input tax credit next month. But this is what our tool is able to showcase the GSTR 3B returns when the supplier has filed, right? So this is about not available in the 2B buckets, and the last one is not available in the purchase register. That means it is those invoices are available in the 2B, but the customer has not entered those details in their purchase register. That means again it is an input tax credit loss. So GST law says that you should have both books as well as the 2B should match with each other. Now, so our tool has identified what are those invoices which are missing. It alerts the supply chain or an accounts department that you have not entered this 28 records, and this is the value of the tax that you are foregoing this month. So they will correct the books and go for the input tax credit. So you have any questions apart from that before we move to the very important session of why the customers receives the GST notices and how our tool can prevent it? Any questions? So we'll go to the Ranjit. Shall we move?
Yeah, sure, sir.
So the first one, whatever we have showcased the demo, is the perennial. It is addressing the perennial issue number 1, that is the input tax credit claim. Now the second one is the customers are receiving the GST notices, and broadly there are few parameters why they receive the GST notices. So our tool is giving the information why they are receiving the notices and how our tool can prevent it. For example, if there is a difference between the GSTR1 and the 3B tax liability, right? So our tool will give the information that if there is a difference between the GSTR1 tax liability and the 3B, and it alerts the system. Yeah. For example, now this is the GSTR1 summary filed by the customer, and we are also showing what is the GSTR3B summary filed by the customer, and also the difference. See, for example, in the month of June, there is a difference between the GSTR1 file data and GSTR3B file data. So if our tool is giving this kind of information, the customer can very well awake and do the correction in the entries so that he can prevent the GST notices, maybe with a small fine or penalty, right? So this is one type of, this is one reason why the customer will get the GST notices and how our tool will identify. Go to the second, next one. The second one is as per the tax liability, as per the GSTR1 and e-invoicing. For example, at any point of time, the GSTR1 filed data cannot be less than the e-invoicing. So our tool is giving the information what is the GSTR1 summary and what is the e-invoicing summary and what is the GSTR1 versus e-invoice. So this is the most common issue that we are finding across the industries. There are every month almost Jan, Feb, April, May, June, July, August, most of the months there is a issue with the data between the e-invoicing and GSTR1. That means there are discrepancies. It cannot be, it's not supposed to be any discrepancies. Hence our tool is giving the information that this is the invoices different. See, for example, I have personally seen the notices which the government has sent 3 years back data. They have analyzed 3 years back and sent the notices to the customer stating that you have a discrepancy in the data of invoicing and GSTR1, right? But if the customer runs this program, is file data in our software is giving this entire information one year consolidated. Now he can take the action and do the correction so that he can prevent the GST notice. You will see another example. The next one is the ITC under the reverse charge mechanism. So yeah, click third one. So what happens is there is actually most of the cases, most of the customers are today are not aware that they need to file the reverse charge RCM. They need to pay to the government and then go for a claim. But what happens is when they don't do, and when they don't do, and also if they do not verify the 2PM RC, what is the 2BM RC and what is the 3B RCM summary, and takes the input tax credit. If they don't declare the RCM liability in the 3B, so the liability will reduce, and the once the liability will reduce, ITC will be more. In such a case, then they have to pay only tax liability less, but that is not allowed, right? So, for example, if it is a GTA, they need to pay 5% reverse charge mechanism while they are transporting the goods, and then go for a refund, right? But if they do not declare, then again there is an issue. So here you can see the 2B RC summary and 3B RC summary, our tool has consolidated and given the information that there is an issue with the data, right? Yeah. So the next one is tax paid and ITC distributed by ISD. So what happens is the ITC distributed by ISD. So as per the GSTN tool, GSTN law, the customer can take the input tax credit and they need to proportionately distribute the eligible ITC. But if it is if they are not distributed based on the 2B data and they have the difference in the 3B whatever they have filed, the government will send the notices. Luckily here I think he is not the ISD distributor, therefore there is no scope for the GST notice. However, our tool identifies what is the difference between the ISD as per the 2B and ISD as per the 3B and gives the information to the customer so that he can take the action and prevent the GST notices. Here then again you can see the ITC on the domestic purchases, all other. Yes. So I'll give one example. Let's say, for example, I have traveled to Bangalore, for example. Now I'm coming back to my base location and submitting the details to the accounts and finance team. Now, as per the rule number 17.5, blocked credits like local conveyance or Uber or anything, auto. So these are all not allowed, the taxation, the tax part. So the customer has to enter those details into the expenses, not into the ITC. But they have, if they claim wrongly that that is the part of ITC, then the tax liability will reduce so that the customer will pay only the less liability. But whereas the government will identify such blocked credits, and in the 2B, the ITC will be reduced. Hence, our tool will provide the information between the GSTR 2B and the 3B, the ITC part, and gives the information to the customer. And it is again one of the most common reason for why customer gets the notices. For example, here it is GSTR 2B, other ITC summary. Go to the 3B. This is the 3B, and this is the GSTR 3B versus 2B. That means here there could be that customer, instead of claiming the expenses, the ITC blocked credits into the expenses, he has shown as taken as an ITC and got into the wrong practice, and they are likely to get the GST notices because there are ineligible ITC. They are also claimed in the 3B, whereas in the 2B it is not showing, not reflecting. Yeah. So this kind of the issues also our tool identifies. Apart from that, our tool is also identifying, for example, e-way bill versus GSTR1, e-way bill versus 3B. Also, we have got now we are upcoming even with this data, so that the customer can see. For example, what happens is there is something called sale on approval, which means I can send the material first without raising the invoice or e-invoice, but I need to declare those tax liabilities in the 3B. If I don't do that, my
Thank you, sir. Thank you.
Yeah. Thank you.